I'm Deborah Borchardt, and this is your midday market update. Well, the markets are kind of flat today following, of course, yesterday's debacle over at the Nasdaq where trading was halted for 3 hours. We've seen essentially smooth trading today, but of course it's still a lot of discussion around that. Joining me now is Peter Cardillo. He's the chief economist over at Rockwell Global. So let's talk about this thing over at Nasdaq. It's very odd, and it was also a little interesting, too, that this morning on CNBC, Greifeld said, let's talk about other parties, that they were affected by another party, and it sounded like it wasn't necessarily a Nasdaq problem, but a party connecting into Nasdaq.
Yeah, and that raises the question whether or not there's hacking going on, and if there is this coming from some terrorist group? This has been going on for a while now, and so I think that the fact that the White House and other government entities are getting involved, that makes it somewhat suspicious.
It did seem a bit odd, and I know that we in our team over at the Street were talking about, could it be a hack, or could someone have jumped in to disrupt our markets here in the States?
That's a possibility. I'm not saying that that's exactly what happened, but obviously, you would think that after other incidents that they would have perhaps resolved some technical glitches that may or may not have happened in the past, or that could happen. So, I'm somewhat skeptical about that.
When we look at the volume, volumes have been extremely light. We're light again today. That is not unusual for the summer. But how are you feeling about the market going forward? Because we have pulled back just a little bit here.
No, I think we're nearing an end of this technical decline. I think that we probably could test S&P 500 around 1635, 1640. Obviously, it doesn't look like that's going to happen today, because we did have a very weak economic indicator referring to the new home sales, which actually plunged, and that was a bit of a surprise. And I guess, the fact that treasuries are not going to be a problem today for the market, and it's Friday. So, we'll probably test those lows next week. I think we'll hold, and I think we'll probably consolidate during the month of September, as opposed to perhaps any market decline. And then I think the beginning of October, we'll probably see the rally resume, and by year end we'll be at higher levels. And the reason being is that the market has already discounted the fact that the Fed is going to pull the trigger in trimming its bond buying program, but it hasn't made up its mind whether or not it's going to be in September, October, or December. I am sticking to my predictions that it'll probably be at the end of the year, possibly even in the first quarter, because I think what might hold them back is while the economic numbers so far have been improving, there are certain indicators that suggest growth is not going to go much above 2.25% for all of 2013. So I kind of suspect with the fragile emerging markets, the situation in Europe, that they're probably going to hold back.
All right, well, there you have it from Peter Cardillo. He's the economist over at Rockwell, thinking things might be a little rocky through the end of August into September, but we might start to see those rallies come back in October. That was Peter Cardillo, and I'm Deborah Borchardt with The Street.